Hey, what's up, guys? I just wanted to make a quick video just to kind of show how I like to poke around and make a few bucks before an expiration date on SPY, which is the S&P 500 ETF that I prefer to trade. So what I like to do is sometimes on a day like this, this is August 6th, 2019, I'm using the Thinkorswim on-demand platform, which is basically like a time machine for the stock market. It's free to use if you sign up for Thinkorswim. Check out my link below to check that out in detail. But I'm on August 6th, and it's towards the end of the day here. You've got, with SPY, you have all kinds of weekly expirations throughout the week, which is awesome because while you won't make a ton of money in terms of premium on some of these expirations, which are like 1 day away or 3 days away, if you have some big movements in SPY, which is not typical, then you get a lot of implied volatility on the different strike prices here. And I like to sell volatility. It's the number one way I make money with options, okay? So not any financial advice here or anything. I'm just showing you what I like to do and take it for what it's worth. But I will come in on a day like August 6th. SPY is up. You can see that over here. And throughout the day, there was probably a better time to come in here and time it a little bit better in terms of these premiums being a little bit higher. But I don't really care. I'm just coming in kind of at the last minute, and I'm just going to like scrape some off the top. So the further out I go, obviously, the less likely these options are going to be, or these strike prices are going to be to get into the money, which is where I'm going to lose money. So it's kind of like a balance, like how much do you want versus how much risk do you want to take, right? My number one move is to find volatility and sell vertical spreads of the volatility way outside the money. I could come in here and make more money. I'm not interested in it. I'm just coming out here, and let's just say I'm going to go right there where, if you notice this particular strike price, it says 0% increase. This one's 21% now up, and then this one right here is down 36%. Sometimes, not always, you can find a good break right here where this particular strike price is not down, it's flat, and this one is down quite a bit, and so the spread there is really healthy. And that happens to be pretty far removed out of the money when it comes to the S&P 500 ETF here. It's just not going to move all that much every day. Sometimes it will, and you'll get burned if you get too close. But, you know, and most of the time, from my experience, I am very successful just staying about 4 or 5 strikes out. So I'm going to come in here, going to sell this vertical spread. Just going through it like this so you guys can see. It's telling me I'm going to get 8 cents per spread that I'm selling, which equates to $8 in the options world most of the time because it's 100 shares. So I'll just say like maybe 10 of these, and it'll show me basically I'm taking $920 worth of risk to profit $80. And then I could show you a bunch of other metrics of, like, especially in the Greeks, of like, you know, what this is going to do over the next 24 hours and everything. I like to keep this stuff really simple. This is good for me. It's far enough out of the money. And this is more of just me showing you like something I would do to make a few bucks overnight, pretty much. Because I'm betting that SPY, because it didn't move too much up in this day, it moved a good amount, but not like a crazy amount, that usually it's like up or down, up and down, up and down. So most likely tomorrow it's going to move down a little bit, or not like way up again. Just the kind of the nature of the beast with the S&P 500 usually, from my experience. So I'm going to go ahead and sell that. I was a little bit high, so I'm going to have to sacrifice a little bit to get this to go through. So I'll drop it down to 7 here. I always sell and buy on limits. I recommend you do the same because you lose a lot of money if you just go out at market. Okay, so I sold that, and you can see it here. Got the vertical spread. 7 cents. So my max profit's $70. And hopefully what I'm banking on here is that over the next 24 hours, because this particular chain expires, it's got an expiration date of August 7th. It's August 6th, right? Tomorrow in this world, in this virtual world, is August 7th. And so I'll go ahead and fast forward to tomorrow, and we'll just go out in the morning. We'll go to like 10:47 in the morning, okay? So while that updates, what I'm banking on here is that it is not, this right here that I sold is not going to be up here in the money. So that's kind of like a basic options thing. There's better tutorials out there that can explain what all this is if you're just new to options. But kind of as I guessed, SPY came out here. It looks like it came out lower, which is great because that threw us away from the money. And now it's going up, right? But most likely, as you can see, because it came out kind of on the opposite end of the spectrum from where we sold that volatility, because all these calls were getting increased in volatility and increased in price because SPY was going up yesterday. Now it's gone the other way, and they pretty much are worthless, right? So if we go back to the monitor tab here, you'll see that in this vertical, I've made $65 out of the possible $80. That's good enough for me. Even when I get to like 50% profit of a spread or anything else that I've sold, I usually try to close it out. But what I'll do is I'll come in here and create a closing order. And I could like let it expire outside the money and get the full premium. Especially in this case, it just doesn't look like it's going to come back far enough. But why risk that? In my opinion, I don't want to risk that. TD Ameritrade does not close me, or does not charge me for closing an order that's under 5 cents per option. So I'm not going to get. Actually, they will charge me commission, and then they'll refund it later. But I can close this out at 1 cent and lock in that profit. And so if I come back now, it actually came to $60 of profit. So that was literally, I mean, this is, I actually didn't have to wait until 10:48 the next morning. If I would have sold it at 9:30, probably 9:35, 9:40, it probably would have been the same. Maybe you have to wait until 10. But that's a quick $60 with only risking $900 in this virtual account. And that's how I make the majority of my money trading options, is just little stuff like that. And if you think about it, like this virtual account is a $100,000 account. So I could have done, hundreds of those on different securities, keep my sizing small to where I'm not overly at risk on one thing or another, play different, securities, different dates, everything, to where you just aren't exposed to like one big thing. And it all adds up to be a lot of money. So anyways, guys, subscribe to this channel. If you liked this example, I'm going to be trading live a lot. I have most of my money with a money manager that trades options for me using these types of techniques. But I will have kind of like a fun account that I'm going to be trading live on this channel. And I would love for you to subscribe and just kind of check out what I'm doing every day and hopefully learn from it. And hopefully I can learn from you guys too. So leave me a comment if you have some thoughts on this, and look forward to seeing you on the next video. Thanks, guys.